Hey guys, what is going on? I am Michael, manager of No Boundaries Real Estate Solutions and real estate agent with eXp Realty. And I need you to know that I am super excited that you are getting ready to watch this presentation that was given to myself and some other real estate agents and investors in the Kansas City area. So this presentation was put on by NewAmerican Funding, and they are talking to us about renovation loans. So here's a quick synopsis of what you're about to get into so you know if you want to spend the rest of your time getting the full details. So a renovation loan is a loan that you can get as a home purchaser to buy a home that needs some pretty serious or even minor repairs. These loans are great because a lot of standard loan products don't let you actually purchase these homes until those renovations are completed. So now, using this type of product, you can actually find a home and make it how you want it before you even move into it, which is awesome because let's face it, you deserve what you want in your home, especially if it's going to be your forever one. So towards the end of this video, you are also going to get a question and answer round where you are going to get some insights about this loan product and what you can and cannot do with it. Also, I'm going to have a link for you where you can download these slides in their entirety, and feel free to call these lenders up at any time if you have any questions. So without further ado, let's go ahead and get started with this video.
And both of those products are loan programs that are available for the rehabilitation and or repair of residential properties. They are one-time closed mortgages, so we combine the purchase or refinance of a property along with the renovation costs, and the renovation or repairs are completed after the loan closes. The loan amount is based on the projected value of the property, so not the current value, but the after improved value. And we offer these products on 30-year fixed rate mortgages, and we follow FHA and Fannie Mae standard credit underwriting guidelines. The property obviously does not have to be the worst house on the block. It basically allows the client to borrow or rehabilitate or repair the home to their preference and need based on their needs. So why would you guys choose renovation lending? I know some people they would steer their client away from this product, but this really is an awesome loan. It increases the likelihood of a sale. It offers the alternatives and can help move homes that may have difficulty selling. A buyer's agent, you can get a deal competing with lowball cash buyers and could potentially fix issues that turn buyers off. And then from a listing agent standpoint, it gives an opportunity to sell cash-only properties with financing and sell properties as is. So there are two FHA renovation proposals. We have the limited FHA 203K, and that towards projects that are cosmetic in nature. And then, we can include FHA required repairs in the limited 203K, and then any additional desired improvements, but the renovation cost cannot exceed $30,000 on the limited. The standard 203K does require a HUD consultant, and this is geared more towards the complicated projects, projects that may require permits or structural work, and the cost exceeds $30,000. They can include FHA required repairs or desired improvements. And then we have the Fannie Mae home style, which we can lend on properties that can't get FHA financing, and this will allow you to go above the FHA maximum loan amount that we currently have in place. So you have a client that's buying a house for $300,000 and they want to do a $100,000 renovation. This is something that can be done on the Fannie Mae home style loan. So the next slide just kind of talks about some of the program highlights. The loan limits, obviously we're limited to the lesser of the conforming or the high balance limits or the max county limits for both programs. The maximum repair costs, we can go up to the allowable loan limits, including the cost of homes on the standard, and on the limited, we can go up to $35,000. And the previous slide said 30, but the $35,000 actually includes the hard costs and the soft costs of the limited. So that's usually will put your bid at about 30,000 on the limited. The standard renovation does have a minimum repair cost of 5,000. There is no limited on the 203K. I'm sorry, there's no minimum on the limited 203K. The repairs will need to start within 30 days of closing, after closing, and must be completed within 6 months. So the cool thing about this project for you guys as realtors, like I mentioned before, this is an as-is deal. There's no need to negotiate inspection issues. Those are just handled once the loan closes. We are required to have a HUD consultant on the standard 203K. We are not required on the limited. And there is a contingency reserve on both of these products. And basically what that is just a cushion that can be used for any safety and hazard issues that may be discovered during the renovation or any cost overruns that are discovered during the renovation cost. You can purchase and refinance using the 203K loan on a single family residence, a 2 to 4 unit, a HUD REO, FHA approved condos, bank owned REOs. The only stipulation is that all properties must be completed within a minimum of 12 months. So you cannot use the 203K on maybe the contractor ran out of money. Okay, so the 203K features, this is a fixed rate 30-year program. We will not allow an ARM or a buy down. It is geared for purchase and rate and term refinance, no cash out allowed, and owner occupied, no investor opportunities here. The loan to value, so the buyer is only required to put down 3.5%, and that is on the acquisition cost. And we can go up to 97.75%. And keep in mind that both of those loans, both of those percentages are based on the after improved value. We do have a minimum credit score of 620 on this product, so keep that in mind as you are talking to clients. And I wanted to kind of give you a scenario, so when you, if you do run across this with any of your customers, you can kind of explain this. So let's say you have a purchase price of $50,000. It's a single family home. There's deferred maintenance that may need to be done, foundation repairs, and it may need a new roof. So in this scenario, the as-is purchase price is $50,000, and the total rehab cost with fees and reserves is also $50,000. So the total cost, or essentially the new sales price for the client, is $100,000. Their down payment is going to be based on an acquisition cost of $100,000. So they're looking at a minimum down payment of $3,500. When we appraise our renovation loans, we are appraising them based on that work already being completed. So we are presenting the bid to the appraiser, and he's going to give us the value as if the work is already done. The Fannie Mae product that we have, again, is standard qualifying and underwriting. So if your client qualifies for a normal Fannie Mae loan with 3% or 5% down, and we discover that they find a house that may need some repairs, Cheryl can easily flip that loan to a Fannie Mae home style with limited interruption as far as the file flow is concerned. The primary differences with the Fannie Mae versus the FHA, there are no restrictions on the repairs. As long as they are permanently affixed to the property and they add value, no issues. So luxury items, pools, fences, landscaping. I don't know if this is something that's a market in your area, but you can build an accessory dwelling unit or what's known as a mother-in-law's quarters. You can build that with this product. The contractor with the Fannie Mae home style can be related to the buyer. And obviously, if they put down 20%, there's no mortgage insurance. We can do owner occupied up to 97%. We can offer this on a 2 unit up to 85%, and a 3 to 4 unit 75% loan to value. If you have clients that are interested in doing this on a second home, they can go up to 90% loan to value. And this product will allow investors to participate, and they are limited to 85%, but it is for a single family home only. And just wanted to also make a note that the loan amount is limited to $75,000. And just real quick, wanted to give you a similar scenario with the home style: 50 sales price, 50 renovation cost, total acquisition cost or new sales price is $100,000. We can lend 97% of the acquisition cost. And the 97% or the 3% down is for first-time home buyers. If that is not the case, then we're limited to 95%, so they would have to bring in 5% of the sales of the acquisition cost. So benefits to your home buyers. The renovation provides new and endless opportunities for the home buyers, obviously. There's no need to find the perfect home when searching. It allows your buyers to customize any potential property, and it opens up a wider range of inventory for home buyers to choose from. Obviously, we're all hooked on the some of the home remodeling shows. So what you're going to find is your clients are actually asking for these products now, and they're not afraid of going in and doing renovations. So just, you guys being able to offer this is going to definitely increase your opportunities to do more business that you may not have done before. You encourage your clients to look, find a home that didn't need work. Benefits to you all as realtors. This will allow you to expand your inventory. Save transactions with problems on an appraisal. I'm sure we've all ran into that. There's an issue when we got the appraisal back. You may have encouraged your client to get out of the transaction because of some of the issues. This opens up a new opportunity because maybe it is $20,000. You can renegotiate the price, but we can include that renovation cost in the loan amount and save the deal. All of the repairs are done after close, and the seller does not need to make or pay for any repairs prior to closing if it's not in the contract. And it also enables you guys to market distressed properties to the general buying public instead of cash-only investor buyers. And you increase your opportunities to sell and buy as is listing. Provide greater value during listing presentations. Maybe you're meeting with a client and they need a lot of work done on their home. They know they're going to sell in a year or two. This gives an opportunity for you guys to offer this product as a refinance for your client to, do a renovation loan on a refinance and then put their home in a position where they're ready to sell in 6 months to a year. And I just wanted to share with you some statistics that we have found that 65% of homes in the U.S. are 25 years or older. Homeowners have spent an average of $6,600 on home improvements in the last 12 months. And millennials, our babies, they are twice as likely than baby boomers to renovate their kitchen and bathroom. I come from a generation, or my parents, they took their time and they fixed things as they could. But the millennials, they want the house how they want it and they want it now. So this gives them an opportunity to be able to do that. Fannie Mae expects renovation spending to be over $10 to $12 billion in the next 10 years. So your clients are going to want to know how they can make the house their own when they're searching. And essentially, like I stated, you can do anything: cosmetic repairs, remodeling, modernization, room additions, just basically anything that you can think of when it comes to renovation loans, we can do it. It gives you an opportunity for business development. Like I said, if you have listings and you know a contractor, you can work with a contractor in your area. And obviously, as their clients are trying to maybe renovate their home and get it ready to sell, it just creates an opportunity to develop business and network in your city.
Can you, yes, please. Can you talk for a second about the investor side for what you can do for an investor that wants to purchase with this kind of loan?
Yes, I can. That is a great question. Absolutely. Great question, great opportunity. So if you have investors, and really more so your new investors, maybe you have clients that purchased a home from you and now they are interested in possibly purchasing investment property, we have the Fannie Mae home style renovation loan that will allow a client to borrow 85% of the acquisition cost. So sales price 50, renovation cost 50, the client can borrow 85,000 and put down 15% and be able to purchase and renovate that home. So really a great opportunity for the new investor that doesn't necessarily have the cash flow to be able to purchase a home and also come up with the money to renovate it.
If someone wants to be part of your program that has a desire to fix something up like that, do you all count equity as a down payment? For example, if I can get the property at 50 cents on the dollar and I'm only needing 20,000 to fix it up, I've got a significant amount of equity. If I want to buy and hold it for a cash flow property, can you count that equity as a down payment, or do I actually physically have to come out of pocket with cash for a down payment?
You do. We still follow Fannie Mae traditional guidelines. So if you were buying a house for $100,000, you would still have to come in with your own down payment. However, when you're doing this renovation loan, and if you are only able to come up with 15%, but once that project is complete, you have that equity in the property, there is an opportunity to refinance and get rid of the mortgage insurance that you would have, if you were put down a less than 20%. But yes, there is not an opportunity to use the equity as the down payment.
If I was to do the initial loan with you and then bring back the refinance to you, do you do a zero cost refinance because I'm keeping the business with you?
That is something Cheryl could assist you with.
Okay.
Maybe.
All right.
Maybe.
We've got a definite maybe on the table. Fire it up. I feel the enthusiasm. Because if I refinance and you're doing an after improved value, after repair value appraisal on it because it's fixed up, there is equity in it.
Exactly.
And if I do a refinance, can I do... Go ahead, sorry.
I'm sorry, I didn't mean to cut you off.
No, you're fine. We're just excited here. Is there a way to pull cash out on a deal like that?
You'd have to wait a certain amount of time.
6 months?
Season.
6 months.
He wanted to know about pulling cash out, and so there's seasoning, 6 months.
Sure.
It
Okay.
depends on the loan, but it's 6 months.
Oh,
is a bit.
absolutely. If the equity's there
Maybe
and
12
you
months
meet the
on that.
guidelines and the renovation is complete, there is absolutely an opportunity to do a cash out.
Okay, clarification on the seasoning. Maybe this is a Cheryl question. I don't know. The seasoning, is that seasoning of ownership, like 6 months of ownership, or is it seasoning of having a cash flowing tenant?
It's 6 months after you do the loan,
Okay,
after it
perfect.
closes.
All right, thank you. What happens if there's money left in the reserves? Let's say I got a $50,000 escrow and I normally pay my roofer $5,000, but he finds out it's my birthday and gifts me that, and the money I was going to pay him stays in escrow. What happens to that? Do I get the cash for that?
The first thing I want to tell you is I need the roof number. But what happens when there is money left on the table is it goes back towards your principal.
Okay, so it's a credit straight to
Reduce the principal.
principal reduction. Okay, cool.
Yes, principal reduction.
Hey guys, okay, so thank you for watching that entire video. If you just skipped to the end because you want to hear the Q&A, that's fine too. We're all entering this journey on a different point. Don't forget that the slides for this presentation are in the video description, and you can go ahead and download them and have access to them for your own reference. I'm also throwing up here our contact information because I need you to do something. If you are a home buyer and you're overwhelmed with the information that's out there, you've considered doing it yourself but realize, hey, there's a lot of paperwork involved and I don't want to get into any legal trouble if I forget to do something, then you need to reach out to me today. You can call me on that number or you can send me an email, and we're going to talk about what type of home you are looking for and how we can get it. Even if it's not on the market, we can figure it out. Or if it's on the market and it needs a lot of renovations, we now know of a tool that can help us get there, right? I want to see you go from uninformed, powerless buyer to informed and empowered buyer, living in the home that you want. And I can help you do that in 3 easy steps. All you have to do is send me an email, let me know that you're interested. We will have a home buying consultation, and then we are going to develop a plan mutually to execute that will get you into the home of your dreams on a timeline and on your budget. Okay, so now I have a guarantee for you. I want to work with you so much and help you find the home of your dreams that if we get through all these steps, right? If we get through the you contact me or no obligation consultation and plan, but yet I've not communicated with you and you don't feel like I've done a good job, you can cancel the contract at any point in time during that, and you do not have to pay me a commission, not a cent. It's important that I find you what you need and help you out, and if I don't do that, then I don't deserve to be paid. So guys, that is it for this presentation. I am super stoked that you watched the entire thing, and all you need to do is 1, call me, 2, have a no obligation consultation, and 3, develop and execute a plan to find the home of your dreams. Take care, and I look forward to working with you.